Hello everyone, this is Professor Kent. This is part 2 of our chapter 4 homework questions. The first question that we are going to take up now is exercise 410. So we're going to do exercise 410, and seems like a big question, but it has 4 parts to this question. The first part of the question is to prepare a multi-step income statement. So we're looking for a multi-step statement of financial performance for 2020, and we want ignore the calculation of ASPE, and we want to know if what company is falling. The company is falling with IFRS standards. If they're following IFRS standards, and I see that we have OCI, so we have to show other comprehensive income in this question. So when we start with the multi-step income statement, of course, we start with the name of the company. In this case, we have the name of the company is Gotilab Corporation. So the name of the company is Gotlib, Gotilab Corporation. And what are we preparing for? Preparing a statement of financial performance. And when are we doing it? For year ended December 31st. So when we are asked to compute the multi-step income statement, prepare it, we are going to have a heading. If there's more than one sales, we needed to have a heading. So let's see what the question is saying. The first thing we're starting off with is sales revenue. So that's what we're going to do, is sales revenue. And then the sales revenue we have is 1.3 million. So that's what we have. So what I like to do I cross it out so that we know that we have taken care of it. Now, going further to look at it, if we have dividend revenue, it's going to come into our other revenue. The only revenue we have is the sales revenue. Then what we have is a cost of goods sold. Sales minus cost of goods sold will give us a gross profit. Cost of goods sold, and our cost of goods sold is 780,000, and difference between the both will give us a gross profit. So difference between your sales revenue and your cost of goods sold gives us a gross profit. In this case is 520,000. So we have taken care of that. Then next section is my operating expenses. So let's deal with our operating expenses. From there, if it's a multi-step, we needed to see what kind of expenses they have. So in this case, we have two types of expenses. We have a selling expenses and we have an administrative expenses. So the first one is selling expenses, and that is 65,000. And then this is our first column. Then we have administrative expenses, which is 48. Administrative expenses, and that is 48,000. So altogether we have total operating expenses are 113,000. And if I take our gross profit minus your operating expenses, what it will give us? Income from operation. So income from operation. So when you have a multi-step, you have a operating and non-operating. So we have to separate them. So income from operating, or income from operation. So in this case, I will say it from operation. That will be your 407,000. After that, we have first thing we're going to get is other revenue and gains. So any other revenues and gains will come in here. So we have a dividend revenue, that's the first one, and the other one, actually not the first one, this one, interest income. So we have two. We have interest income. In this case, the interest income is 7,000, and then we have a dividend income, which is your 20,000. So we have the next one is called a dividend income, and that dividend income is 20,000. So altogether we are we have 27,000 of other revenue and gains. In this case, I didn't see any other ones. Now going further, the next one is my other expenses and our losses. So let's deal with that, and then we will see what else is happening in this. So now the first one is that if we're going from here, is the first one we have is loss on inventory due to decline in net realized value. So let's put that in first, loss on inventory, and that is my 80,000. So that's, we have taken care of that. Loss on a disposal of an equipment, that's also a loss on disposal, and that is your 35,000. We taken care of that. Now this one is depreciation expense related to building omitted, so that will go on to my retained earnings section. That's a prior period adjustment. And then we have a loss on loss from expropriation of land. So we have a loss on a land, and that is your 60,000. So that is my 60,000. Altogether, we are done with all our losses, and that is 175,000. After we completed that, that'll be income before taxes. So income before taxes. And then this is my incomes. I add this and then I subtract this, and I will get 259,000. And then from there we pay the income tax expense. And they told us in this case, in other words, this could also be called income from continuing operation, income before continuing, income before tax from continuing operation. That's another way of saying it. In this case, it's a 25% of that, and that is 64,750. And then what we get is we get a net income. Net income, in this case, I didn't see any discontinuing operations, so we leave that alone, and that is 194,250. So $194,250. So of course we saw some other comprehensive income. So our next heading will be other comprehensive income. Now we pay the taxes, so anything we put it in after that will be net of taxes. So other comprehensive income will be reported as a net of taxes. So we already paid taxes at this point, so everything we do up to that after that is a net of taxes. So the heading will be other comprehensive income. When we think of an other comprehensive, there is what goes in there. So let's look at it, what goes into our things. So then the question told us that fair value OCI equity investment trade on the stock exchange, and then there's a gain and loss on the fair value OCIs are not recycled through the net income. So let's see which ones are that. In this case, they told us that unrealized gain on fair value OCI equity investment. They told us this is 42,000. Of course, we have to do a net of taxes. So let's work out the number. It's called an unrealized gain on fair value OCI investments, and it is net of taxes. Net of taxes. They didn't tell us the amount, so how are we going to calculate it? I'm going to do it to the left side. If it's 42,000 multiplied by the 25%, that will be that will be the tax amount. In this case, it will be 10,500. So net of taxes, how much is my tax? Net of 10,500 taxes. So that is the amount. So then what we're going to do is your unrealized gain was 42,000. From there, 10,500 is my tax amount. My net amount is 31,500. So that's what I would report, 31,500, and it is an unrealized gain. If it's an unrealized gain, treat it as a gain. So we add it, and that will give, after that we will get a comprehensive income. Comprehensive income. So I add these two numbers and then we will get 225,750, and this is my final number. If this is my final number, we needed to double underline it. Now that was the part A, and let's go forward to part B. What is part B is asking us to do? Part B is saying prepare a retained earnings section of the statement of changes in the equity for 2020. So I'm not going to delete this, erase this, because we do need an income to take it forward. So the next one is my retained earning. Again, you're going to have the name of the company, and then it's going to be what are we completing? We are preparing statement of changes in the equity. So that's what, and we're doing the retained earnings section of it. So it will be called statement of changes in equity. Again, we are going to have a date. So what we're going to do is we're going to start off with retained earning, and that is our beginning balance. So beginning balance in retained earning. So that will be January 1st, 2020, and that will be as reported because we had a prior period adjustment. So in this case, we started off with 980,000. So that's what we are going to start off with, 980,000. Now we had a prior period adjustment. That prior period adjustment relates to what? Our depreciation expense. We omitted it. So what happens if we omitted it? Our retained earning was higher. If my retained earning was higher, now we have to bring it down. So in this case, it was 55,000. They didn't anything we put it onto the retained earning will be also after tax. So let's do that correction of an error in depreciation. So correction of overstatement, and that overstatement is for 55,000. So that 55,000 is net of taxes. So 55,000 multiplied by the 25%. That's our tax rate, so that will be our net of taxes. So when we are putting it, when we're adjusting anything onto our retained earning, they will be net of taxes. So now in this case, what type of a correction are we making? We're making it, you could always, not necessarily we needed to put it in here, but if we could do a depreciation expense, and then it will be net of, and then we have to put the tax amount. So if it was 55,000, we multiply by the 25%, and that will give me 13,750. My gross amount was 55. My net amount will be 41,250, and that's what we have to report, 41,250. And then we are the net, it's net of taxes, so 3750 is my tax amount. And once we made the adjustment, that this balance is a restated balance. So balance January 1st as restated. So in this case, and that's the balance January 1st as restated, and that is your 938,750. So then starting from this point, then you're just going to complete your retained earning that you normally do. If there's any, you add your net income and you subtract your dividends. In the question, we declared a dividend of 45,000. That's your 45,000. But before that, we had a net income in the question that we calculated it in the first part, which is $194,250. So that's my net income. And what are you going to come up with? That retained earning for December 31st. So that's the retained earnings December 31st, 2020, and that will be your 1,088,000. So that's my that's your retained earnings. So now what the question is asking for is, how to prepare the journal entry to record the depreciation expense that was omitted by mistake. So what they did is, the question saying that we said that there was a mistake of 55,000. In that 55,000, we know that in that 50,000, 13,750 was your 13,750 was the tax. So how do we do an entry? If you were to think of if depreciation wasn't recorded, your retained earning was overstated. And what number comes to a retained earning? Retained earning will be a debit. So debit your retained earning, and the amount will be whatever we had it for after tax. So the mistake was for 55,000. From there, we had to deduct the taxes, and that those taxes was 3750, and difference between those two will be going through my retained earning. In this case, if you look at it, we minused it here. That means we are going to debit the retained earning. Then what we have is, we have a credit. If we didn't do the depreciation expense entry, then we did not do our accumulator depreciation either. Accumulator depreciation account sits on my balance sheet. So your accumulator depreciation will be for the full amount. In this case, it will be for the 55,000. That will be your credit. And then if our net income was low, we didn't pay the taxes to the government, so we have an income tax payable. That will be your debit. So income tax payable will be a debit. So if we didn't report any expenses, my net income was what happened to, why is, if you think about it, why is it why do we think of it as it's an income tax payable? So now if you the way to think of it is like if it's a, you're going to be learning in chapter 20 deferred tax. So this is something that relates to deferred taxes. So if we did not report the one of the depreciation, if my in other words, my expenses was low, if my expenses was low, that my net income was high too. If my net income was high, that means my retained earning was high. So that's what's called an income tax payable. It will be a debit of 13,750. So so now let's read the let's see what the D part of the question is asking us to do. So what is the D part of the question is asking us to do? D is asking, how should Gottlieb account for the unrealized gain for fair value OCI investment if it prepares financial statement in accordance with ASPE. How would Gottlieb's retained earning balance at December 31st, 2029 will be different. So now if they had an ASPE company does not recognize the fair value OCI investment. So if it does not recognize the fair value OCI, we will not have other comprehensive income, excuse me. If we're not going to have other comprehensive income, anything that is unrealized gain, we don't have OCI. So we don't have OCI, then what do we have? Fair value net income investment. So if they are net income investment, they will be recycling through your gains and losses of your net income. So they will be part of there. So that's where you will be putting it in. So that was our question that we had to do 410, and now we're going forward, and then our next part of the question was that we had to take up was 1412. So again, this is also a multi-step statement and a single step statement, and they're asking us what is the difference with information about operating versus non-operating items. So let's do 1412. Now 1412, what the 1412 is asking us to do a multi-step and single step statement. Two accountants, Yun Tsai and Sergio are arguing about the merits of presenting the income statement in a multi-step versus a single